All right. Thanks, everyone. So, big move down today, really not surprising. If you've been a stock market jobber or a member of our community, it's like it was pretty obvious that this was coming. And I will show you why I think it's going to continue to go down. So, here's the S&P. We stalled out today for a little bit at this short-term support around 558. Notice how that was the bottom. But we broke that, and importantly, we broke this more important support level. I'm going to tighten this up a little bit. I'm going to just kind of move this down to there, right? And see what I'm doing is I'm capturing where there was a lot of trading. That was the open, that was the close, today's close. So basically and it's okay to do that. As the market moves on, and evolves, you can true up your price levels. Remember, this is an art, it's not a science. I mean, if it was a science, someone would have had it figured out already, and they don't. Okay, so at least if they have, they're probably just hiding somewhere because they don't want anyone to know. But anyway, we got a situation here where the S&P might completely fall apart. We have this big gap up, and a lot of times when you get a gap up and you eventually reverse and come through those price levels the other way, you get a quick move lower. When markets blast through levels really quickly or when they gap, there's not a lot of time for like a vested interest to form. So if they eventually reverse and come back, there will be less people interested than usual. Like if the market was to rally and get up to around here, around 560, there's probably going to be a pretty significant degree of resistance there because we spent 2 or 3 weeks trading there. So a lot of people traded there. So now they have like an interest in it, right? Down here, where it gapped through, or here where we had these fast moves, people traded, but it wasn't concentrated around certain price levels. So here we have our gap down, and this works both ways, right? When you gap down, one of the main reasons why you get resistance is because you get people who bought trying to sell on the way back up to get out at break even. So when you rip lower like this and you gap lower like this, if it didn't trade there, no one could have sold, right? So when the market actually finally reverses and gets back to those price levels coming the other way, it kind of just rips right through them because you don't have people that bought over here that are remorseful that are trying to sell here. Now, that's why we get our move up. One of the main reasons why we get support is because of the opposite. Remorseful sellers trying to buy their shares back. People sell, price goes higher, and they're like, I made a mistake. You know, if I can, I'm going to buy my shares back. You can see that's why the S&P stalled out here today, was resistance over here. So if we get back in these price ranges, now we have the opposite thing. The sellers are going to have a hard time finding buyers. There won't be as many buyers as there usually would be if it was price levels that we spent some time trading at. So we could be on the verge of a big sell-off here. And well, I mean, it's already started. We've been talking about this for a while. Now, what's really kind of interesting about the market today is that over the last couple weeks, it's been the financials and healthcare have been in the driver's seat. And today, there wasn't really much action in either one of them. Now, over the last 6 months or so, what has led the market higher? Tech. Tech is, almost a third of the market. It's 30%, the tech sector. And so here's the financials. So healthcare and financials haven't given way yet, but I think they will. And that's going to be a catalyst. And now check that for a sell-off. And now let's go over to the tech sector. I mean, look at where today's sell-off stopped, 210. We've been talking about this level since March. Some price levels are more important than others, right? Resistance becomes support. It's not a coincidence that this is where XLK found a bottom. 210 is an important price level. So here's what we got to watch if you're trading the S&P. And if you're a SPY trader, you just got to understand that SPY is the sum of its parts, right? There's a lot of different sectors. Well, there's 11 sectors. So tech over the last, I don't know, 2 or 3 weeks has been kind of neutral, and financials and healthcare have been leading the market up. So now financials and healthcare are starting to kind of stall out, which could be the first sign that happens that they're going to start to go down. And technology is back at this point in the leaders or the driver's seat because we have this massive sell off today. Geez, down 4.6%. So now, you're going to put on the media and they're going to be like, market's down on concerns about this or market's down on concerns about that. I don't know. I'm a technician. I'm a technical trader. I don't care about the news. I get my advice from the market because it's never wrong. And if you just listen to news, you're just going to get confused. All right, so we don't have the call tomorrow morning because I have a meeting I got to go to. But yeah, we'll see you back here on Thursday. And if you have any questions, let me know. Mark at stockmarketjobber.com. Tell your friends, subscribe, do all you got to do. And yeah, we'll see you all soon, everybody. Thanks.